morning and welcome to First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi along with my co-host Lawrence Lewitton, the TIE's content director. Let's take a look at what's going on in the markets this morning. The CoinDesk Bitcoin price XBX index is at 30,124, up 4% and holding steady. Lawrence knows I love to see green first thing in the morning. We'll chat about that in just a second. Let's see what Ether is doing. The CoinDesk Ether price ETX index is at 1,898, also up more than 4%, following in Bitcoin's footsteps. And let's see if DeFi assets are following the same trend. The DFX CoinDesk's DeFi index is at 100, up almost 4%. Look at that, Lawrence. Good morning.
Yeah. Good morning.
All right.
That's a rally.
Let's talk about the price action. After weeks of gloom, Bitcoin jumped for a second consecutive day as investors drew confidence from a few spot Bitcoin ETF applications. Of course, the biggest one of those is BlackRock. Tell me about what you're making of this.
So it seems, the application for the ETF, I think, is going to be interesting because if BlackRock doesn't get an ETF, no one can. I mean, that's basically it. We've seen other applications from other firms before, but this is really, the largest one out there when it comes to iShares, when it comes to filing, and they have incredible legal resources, which is what's more important in this situation, but also incredible asset size. We're trillions, not billions, and that makes a difference in the sense that they kind of know where to dot their I's and cross their T's, or cross their I's and dot their T's, depending on however Gensler wants to do it. But it's, and I think that they would, in general, we would have a final say, if you will, as to whether or not this is feasible. But it seems as if the market says, wow, when a big player like this shows interest, when big players, right, the other two were previous applicants before, show interest in crypto, this is nothing but a bullish sign. And of course, as you know, our next guest is a sign of this, and probably he's responsible, I want to say, is kind of responsible for the rally. All those people who have Bitcoin probably should thank him right now.
That was a great segue into our next guest. So let's get right into it. Lawrence, a crypto exchange backed by Fidelity Digital Assets, Charles Schwab, and Citadel Securities has launched in the United States. Joining us to discuss is EDX Markets CEO Jamil Nazarali. Welcome to the show, Jamil.
Hi, delighted to be here. Thanks for having me.
We appreciate you taking the time to be here with us. So let's talk about this. So far the exchange offers Bitcoin, Ether, Litecoin, Bitcoin Cash. Why focus on these tokens? And is there any concern that down the line, any of them are mentioned as securities by the SEC?
Well, we deliberately selected those 4 tokens because we feel very comfortable that they're not securities. And over time, as there's more regulatory clarity on what's considered a security and what's not, we would like to expand the list of tokens that we offer.
So, this might seem silly, but I noticed one thing that wasn't there was Doge, and it's not as silly as that sounds, in the sense that, of course, Dogecoin is known as a meme coin, but it's also decentralized, and it is very popular with retail. But I guess I kind of was surprised not by Doge's absence, but by the inclusion, let's say, of Bitcoin Cash and the inclusion of Litecoin at this early stage. Is there an institutional interest in those versus some of these meme coins, which, though it has a large retail following, it provides a lot of volatility, and it's decentralized enough that I don't suspect the SEC will come down hard on calling Doge a security.
Yeah, we hope that we get some clarity and we're able to offer more coins, particularly, some of the ones that have greater retail interest. The reason we selected those four, obviously, Bitcoin and Ether are the two largest coins. Litecoin, Bitcoin Cash, you're right, they don't have as much interest, but because they're Bitcoin derivatives, we felt pretty comfortable that that they are not securities, and so that's why we had them. There's some interest, not a ton, but it was important to go in there with as many as we could that were also we felt firmly were not securities.
Jamil, crypto industry leaders recently have said the U.S. is not a place for innovation. Some have said they're looking at setting up offshore. Why the U.S. and why now?
All of our backers make investments for the long term, and all of them have been through many market cycles, so they understand that there are ups and downs in every market. I think all of them believe that cryptocurrencies are here to stay, and that it's important to build a marketplace that we feel is transparent, more efficient, and gives investors an alternative to trade through trusted intermediaries, and that's what we're doing. So
explain a little bit about how this works. But interestingly, this doesn't involve a custodian. This is all self-custody, and exchanges. It's an exchange through that method where the institutions, these are institutions. First of all, how are you defining the institutions? Who's invited to trade and join? How many customers so far are there?
And I saw on your list you didn't have Virtu Financial, which is also a public company and one of our big market makers there. But the way it works is we do not have direct retail accounts. So the market that we're trying to serve here is those investors who want to trade through their trusted intermediaries. So there's a lot of customers, whether they're Fidelity, Schwab, Robinhood, etc. They want to trade through the firm that they already have a relationship where their other assets are, and we want to serve that market. And we have what looks much more like a traditional exchange model where we match the best prices in the market, where market makers and others compete to offer the best prices. And what we're doing is we're just making sure the customers get the best price. We're not taking possession of those customer funds.
How many customers? When we talk about customers, your customers are institutions.
That's right.
How many and are involved, and what's the cutoff? Like, in other words, what kind of what's the criteria for being a customer?
On
EDX?
We don't have hard cutoff in terms of your revenues have to be this or your customer base has to be this. We have a number of criteria that we go through. We want to make sure that the firm is reputable. We want to make sure that it's fairly trustworthy. We want to make sure that it's financially stable. And so we have kind of a due diligence checklist that we go through to onboard customers. As you can see from our investor list, we have some of the largest traditional finance firms on there. And there's a number of other investors. I mentioned Virtu, but there's a number of other market makers, including GSR, and GTS, and Hudson Driven Trading, etc.
But in terms of size, are we talking about 10, 100, 1,000?
No, more than 10, fewer than 100.
Got it. All right. In the tens.
Yes, in the tens. That's right. And keep in mind, we just launched.
You just launched, yeah.
Yes.
But just kind of sense it's an exclusive club.
It's a limited club.
For now, maybe.
For now,
at the top of the show, we spoke about price action and the institutional interest that could be driving this price action. We have those Bitcoin ETF applications we spoke about. We have this news. Are you surprised at the market's reaction to this institutional interest?
A little bit, actually, because what we're doing is I mean, we announced this 9 months ago, and we launched it. I mean, we announced the launch just this week, but this is not new news. It's new news that we launched, but it was going to happen, either this week or next month. So a little bit surprised.
And what do you expect? I mean, I know it's a totally different business, but nonetheless, you would probably be involved in some of that liquidity at some point. Do you think an ETF is feasible if it's sponsored by the likes of iShares?
For sure. Yeah. I mean, I think that it would provide another vehicle for retail investor, for any investor really, to own Bitcoin. So it's all about providing more alternatives, right? So people can open an account at a Coinbase or cryptocurrency.com and they can buy Bitcoin. Some of them can buy futures. We want to provide an alternative for those that want to trade to a trusted intermediary, and then there may be an ETF, which would be a good thing. Before we go, I do want to get back a little bit on this whole idea of self-custody, because obviously there was an issue with FTX. FTX for a long time was advertised as sort of like the respected exchange, but obviously we know that they might not have done their accounting and their bookkeeping correctly. I'm being modest here with my criticism. And you guys did a great job of exposing that, right?
Thank you. Well, thanks, CoinDesk.
Thank you to Ian Allison.
Yeah, Ian Allison. Yeah, and everyone else.
Very impressive.
I just sat and watched it, had coffee like everyone else. But this is. Nonetheless, this is kind of a different model than it might be a model that is more, I guess these institutions are more accustomed to. But do you think that this is sort of a model that will eventually seep into retail? You don't have any retail plans, correct? Do you think that this idea of self-custody will eventually become a retail model?
I think that there are going to be some people that select into this and others I think there's going to be a variety of models. And, we want to serve those customers who want to trade through the existing financial institution. Typically, it's not crypto native, but we want to serve that one. And there will always be people that'll have their own wallets, and there will always be people who want to trade through a crypto native firm. So the long answer is, I see a number of different models. Hopefully our model will grow and become successful and become a big part of the market. But I don't see, it replacing all other models out there.
Jamil, thank you very much for joining the show this morning, and congratulations on the launch.
Thanks so much. Have a great day.
That was EDX Market CEO Jamil Nazarali. We're going to take a short break, and when we're back, we'll dive deep into the crypto markets as Bitcoin breaks above the $30,000 resistance level.
Nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year. But at last week's meeting, considering how far and how fast we've moved, we judged it prudent to hold the target range steady to allow the committee to assess additional information and its implications for monetary policy.
That was Fed Chair Jerome Powell speaking yesterday before the House Financial Services Committee as part of his semiannual report to both chambers of Congress. The central bank leader is slated to appear before the Senate Banking Committee later today. And joining us now to discuss it all is Tactive Wealth advisor Eddy Gifford. Welcome, Eddy.
Thank you for having me, guys.
Glad to see you. We had Bitcoin break above 30,000, yet the Bank of England raised rates to 50 basis points today, a little bit higher than anticipated. Though there was some talk about 50 basis points, it didn't seem to really have that much of an effect, at least for the time being, on crypto. Nonetheless, it kind of signals, it seems, that maybe central banks are serious about the rate hikes. What's your take?
Yeah, I think that the one thing that's been made clear by central banks all across the world is that they're not going to back down from the inflation fight. Specifically Powell, he has said that he would rather see the U.S. go into a recession than see inflation run away on us. So, the market, initially didn't seem to believe it, but the funny thing about it is we've seen this a couple of times now where we've had like some pretty significant uncertainty arise, and we've seen Bitcoin actually rally off of that news. So, I think that what's happening is there's a little bit more adoption than maybe there was, 12, 18 months ago. And we're seeing people kind of use Bitcoin at least as a piece of their flight to safety when these types of moments arise. So I know that like interest rates in general can kind of break things. And if things break, then, Bitcoin's probably following it down also. But it seems like it's being a little bit stronger relative to the other risk on assets, Do
you think part of that at least is sort of this side business? I think Katie Greifeld from Bloomberg pointed out that it's a 17% rally since it was announced that there would be that BlackRock was iShares was filing this ETF to a spot ETF on Bitcoin. That it's sort of these things are happening regardless of what the Fed is doing, and that the market is so thin that people are just sort of speculating in Bitcoin, taking on a little bit of risk, but at the same time, kind of looking over their shoulders, seeing what the Fed is doing.
Yeah, I think that, there's always the global macro or the macro picture where, there's a lot to be scared of. Of course, then there's also the price action. And there's also the momentum and the events that are occurring that are helping out, right? I mean, we look at something like NVIDIA last month where it went to the sky when they were talking about all their AI. And the funny thing about that is that Bitcoin and NVIDIA are very closely correlated, and NVIDIA took off and Bitcoin just kind of stayed there. And so, we could see Bitcoin potentially like catch up. We could see NVIDIA fall and them kind of like settle and be correlated again. Or maybe, maybe AI is the decoupling event and Bitcoin can just kind of stand on its own. We'll see. Of course, anytime you have a big player like BlackRock, jumping into the space, or you hear that like Schwab and Fidelity have invested in EDX and they're kind of behind the space. It makes you have a little bit more confidence as an investor that, hey, maybe this Bitcoin thing is actually going to be around if you're kind of uneducated in regards to what Bitcoin is and what it does.
I think I can maybe guess your answer to this based on your previous ones, but let's talk about Bitcoin options contracts where 3.3 billion changed hands across major exchanges, including Deribit. That's the highest single day notional volume in 3 months. Are you surprised about this?
Not really. I mean, like we've been talking a lot about the fact that it's smart to be building a position right now in Bitcoin. And then, when you get an event that says, hey, all the big players are coming to town now, it's hard not to chase that or to try to get ahead of it. And so you're going to see a lot of bigger money coming in when something like that happens, which is exactly what we've seen over the last couple of days. Fortunately, we do have a trading strategy that capitalized and bought and already took some profits. So the nice thing is that the market ebbs and flows, and we just have to pay attention. And from a long-term perspective, we do think that it's a great alternative to have in your portfolio to just kind of, offset some of the risk that's associated with just the traditional markets.
Do you see any potential threats to Bitcoin? And I bring this up because you brought up this whole idea that the market is starting to take the Fed seriously, that they finally, and we talked about this on the show several times, the conflict between the bond market and the stock market, where the bond market has taken the Fed seriously. The stock market was viewed it as sort of like, whatever, you're not raising rates again. But it seems that, maybe they're starting to wake up to it, as you said. Do you think that could seep over into the crypto markets enough to hurt Bitcoin as people find it more expensive to take on those levered positions?
I think that's always something that can happen, right? I think that, anytime that you have like a big macro event, if something happens, like a huge credit event that just causes the US stock market and the global stock market to tumble, I'm going to say that Bitcoin's going to fall with it, right? But I think that the good news now compared to maybe like 3 or 4 years ago is more and more people are believing that Bitcoin can stand on its own, that it's not only a speculative type investment. So obviously, there's other risks. I think if we end up with like some type of like competing digital dollar or something, that could at least initially hurt Bitcoin. But I think that, less and less people want to lean on what the government is telling them to do and want to lean more on themselves. And we're seeing that in, our financial planning. Clients are saying, no, I don't want to include Social Security in my financial planning. I don't want to lean on the government for anything. And so that mentality, I think, helps out things like, Bitcoin and Ether and other cryptocurrencies.
What about some threats to, the global macro picture? I'm sorry, not just macro, but also geopolitical risks, because we have now saber rattling in the South China Straits here. And of course, that's a nice place where one can get computer chips, which are processed. You want to get those miners going, and you need chips for that. And whether or not that those facilities won't come under, I don't know, bombing threats is an issue. Do you think that sort of will that have any effect over the next few months as we start to hear some scary stuff coming out of Beijing?
I think that it adds to volatility. I think that you are going to see maybe the price jump around a little bit more. I think that the numbers that we're still looking at is, 25 is kind of like that bottom threshold. As long as we continue to hold there, we're in a good spot. If we can get above 31.5 and hold there, then we definitely have some upside. If we're looking at it from just the supply and demand type of scenario, though, if there's not as many coins out there, right, then that would or should push the price up. So if we don't have as many chips and we can't mine as many Bitcoin, then there's not as much Bitcoin out there. So that would make it like more expensive. So, but the volatility is going to be real. I don't think that we're out of the woods yet. I think that both in risk in all types of risk markets, we're due for, some unexpected moves and whether that's to the upside or the downside, I don't know, but I'm definitely fearful that we could see a pretty big pullback in risk assets in general, just because we've gone kind of straight up over the last 6 months, and we've seen it with Bitcoin too. Like, I mean, it was up like 40%, over 40% in January, right? So everything has to breathe from time to time. I'm just hoping that it's a breath and it's not a collapse, right?
Buy the rumors, buy the news, sell the rumor in Bitcoin.
Exactly.
I think is the way it goes here.
Of course.
Eddy,
yeah.
Thank you for joining us this morning.
I appreciate it. Thank you.
That was Tactive Wealth Advisor Eddy Gifford. We're going to take a short break, and when we're back, the SEC is back in the hot seat on Capitol Hill. We'll let you know what's going on there.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Welcome back to First Mover. Joining us to discuss the state of crypto regulation in the U.S. is the Chamber of Digital Commerce's founder and CEO, Perianne Boring. Welcome to the show, Perianne.
Hey, it's great to be here.
It's great to have you here. Now, the common theme we've been talking about all morning is that spot ETF. I know you've said in the past that the spot ETF could be a political move if it is approved or not approved. What do you think is gonna happen?
Well, we think it's political that one has not been approved. We've done a deep study of the industry's attempts to bring a spot Bitcoin ETF to market, which spans a 10-year history. And through our analysis and our review of all of these applications over the past decade is the SEC keeps moving the goalpost of what the industry needs to do in order to bring a spot Bitcoin ETF or any spot crypto ETF to market. We have documented how the SEC is holding Bitcoin to a completely different standard than other commodity market ETFs. We believe it is in the best interest of retail investor protection to bring a spot Bitcoin ETF to market now. There's no reason to continue to hold this up. We are encouraged to see this new round of companies apply for one, and it's our hope that one is brought to the market soon.
So, Perianne, as I mentioned earlier, iShares is not exactly a small player in the ETF market. And if they don't get it done, it's going to be pretty clear to everyone else that it's probably not going to happen anytime soon, at least under Gensler. If iShares can't seem with all of its legal resources and everything else that it can do to get it passed, and they've been rejected before for other ETFs. It's not the first time they've been rejected. So if they get rejected, at the very least, though, it says that a Bitcoin ETF, a spot Bitcoin ETF, is not going to be possible. Do you think that there are other concerns that the SEC has that might not be just political in the sense that it's not just about Bitcoin, but that there's another concern having to do with, say, national security aspects to it, internal security, such as concerns about money laundering or use of crypto by state actors to finance things such as nuclear capabilities.
Nope, I don't believe any of that crap at all. This really comes down to a political decision, and Chairman Gensler said it pretty straightforward when he testified in the Senate Banking Committee last year when he was asked by Senator Toomey, why hasn't one been brought through, or what's it going to take? And he said, well, I want jurisdiction over the Bitcoin exchanges. And in that same hearing, he also talked about how Bitcoin is a commodity and they don't have jurisdiction over Bitcoin. So this is a political move. Again, Bitcoin has been held to a higher standard than any other commodity ETF. The reason they've been held up is for political reasons. And this has gone into litigation. Grayscale's in the middle of litigation with the SEC, and their case is that the SEC is acting arbitrary and capricious. We filed an amicus brief in that case agreeing with Grayscale's position. So are there concerns? Sure. Are they legitimate? No.
So do you think that is the compromise then to give Gensler control of all cryptocurrency exchanges, including Bitcoin, including involved in something that otherwise has been viewed as a commodity by the markets and by the CFTC? Do you think that would be a fair...
I'm definitely not going to advocate for that. It's very clear that Bitcoin, as well as other cryptocurrencies, are commodities and under the CFTC's jurisdiction. So, we should. It would be great if the SEC would get back to being a market regulator. The SEC has turned into a political organization. We really need to get politics out of the markets to ensure the United States continues to be the bedrock and the leader in financial and technology innovation.
So as Lawrence mentioned, BlackRock, if BlackRock doesn't get the spot ETF, who can get it? We also have Invesco, WisdomTree. Do you think that these firms have some information that maybe we don't have?
I don't know. I wouldn't speculate on what type of information do these big players have. I think the question you're kind of getting to is there going to be special treatment to these bigger players? And that's, I think, a concern, anybody would have just kind of, watching what's happened over the past 10 years. I will note there is a little bit of history of this. When the first gold ETFs were brought to market, it was not exactly the same, but kind of a similar trajectory where you had some smaller players who had been trying for years to get one to the market. The SEC, it took them a long time to be able to get comfortable with bringing them to market. And at the very end, bigger players stepped in, kind of jumped to the front of the line. And there was a moment where it's like, is this kind of last minute player going to get to go first when you have all these other companies that have been working in good faith, put significant investments into building out the ecosystem to bring a gold ETF to market. So what they ended up doing back then is they brought in a whole host of issuers, and they allowed them to go to market together at the same time. So I think all market players should be treated equally and fairly, and nobody should be given special treatment. If the SEC does move forward with allowing a spot Bitcoin ETF, it needs to be done in a way that's fair.
So, stablecoins. We had Fed Chair Jerome Powell argue that the central bank needs to have an oversight over the stablecoin, over stablecoins. I think we have a soundbite here of him.
We do see payment stablecoins as a form of money, and in all advanced economies, the ultimate source of credibility in money is the central bank, and we believe that it would be appropriate to have quite a robust federal role in what happens in stablecoins going forward, and that leaving us with a weak role and allowing a lot of private money creation at the state level would be a mistake.
We do have legislation, of course, in Congress dealing with stablecoins. What's your take over who should have oversight over the stablecoin industry? How should it be divided? Should it be all stablecoins overseen by one agency, or the Fed even, or obviously, I'm going to guess you think there should be no oversight. But that said, if there's going to be oversight, who would you like to see it in charge of that?
I think it's a bigger kind of question of the whole path to this legislation. So Jerome Powell, when he testified earlier this week, what he was commenting on is the legislation that's being developed by the House Financial Services Committee. And it's just important to understand the history of why that legislation is being created. In 2019, the federal regulators, including the Fed, the SEC, the CFTC, and Treasury, came together and they did a comprehensive study of stablecoins. And what they looked at was only stablecoins that are fully backed by US dollars. They did not study algorithmic stablecoins. They did not study stablecoins that are pegged to other types of assets, whether that's other currencies like the euro or to commodities like gold or diamonds. And they provided a set of recommendations, policy recommendations for Congress to implement. And what the recommendation was to develop a federal oversight regime. So I think in terms of the legislation that's being developed today, I think it's important that we keep the scope of that legislation to what has been studied. So, I feel like, kind of the way you're positioning this is, stable coins as an ecosystem. And in fact, it is. There's a lot of different types of stable coins that have been brought to market. Some have failed very gloriously. Some have been quite successful, but they're built in a lot of different ways. I think when we're developing new regulations and new policy, it's important that we stick to what we know. And at this point, what we have studied are full reserved US backed. And the process to develop a federal licensing regime is underway, and it has bipartisan and bicameral support. It is supported by the Fed and Treasury. And that's the conversation you were seeing yesterday in Congress.
Yeah, I mean, to your point here is that a lot of these most stable coins, or the size of stablecoin market right now is such that most of it is backed primarily U.S. dollars or dollar-denominated securities. As we found out with Tether, there's some Chinese commercial paper, sure. And then you have, others that have the actual dollars in the bank. And then you have, as you said, these other assets that are a small fraction of the total stablecoin ecosystem. But then you had the algorithmic stablecoins, and they failed spectacularly several times. UST wasn't the first failure of an algorithmic stablecoin. There was another one as well. But they purport to be U.S. dollar. They're marketed, if you will, or proposed as one for one with the U.S. dollar. How would those be regulated, or under what? Since those aren't really backed by dollars, they're more backed by the stabilizer coin and faith, much like our U.S. dollar is. Where would that go? Who would oversee that part, if you could?
Yeah, so I mean, you're asking all the right questions, and that's exactly the question Congress is debating right now. And there's a lot of different stakeholders and a lot of different positions being debated. What I think is most important is that we provide regulatory clarity for market participants, particularly the good actors, the companies that want to work with the regulators to make sure we have financial products that are safe and sound. We've got really amazing innovators in the United States. Just a big call out to Circle. They have put significant resources into ensuring they have a trusted product, and they really want to work with the regulators to be able to scale what they're doing in a safe and a responsible way. And they're asking for this regulatory clarity. I think it's really important for U.S. innovation and competitiveness that we have regulatory frameworks that allow businesses to build and develop in the United States. And that's what the urgency is today.
Perianne, the Chamber of Digital Commerce released its NFT impact report. We've spoken this entire segment about regulation. Are we seeing any demand for regulatory frameworks in the NFT market? And also, what are some of the key takeaways from that report?
Yeah, so today we are rolling out a nationwide education campaign around non-fungible tokens. We've done an in-depth study of what businesses are building around NFTs. And what we're finding is that this is a bedrock for non-financial applications and use cases of blockchain technology. And this is very different than digital assets that are financial in nature. The current regulatory system that the industry finds itself in is a cautionary tale. When we don't have regulatory clarity or just basic regulatory frameworks in place for businesses to build, it squashes innovation and it pushes intellectual property overseas. That's happening with financial applications of digital assets today. We want to get ahead of that for non-financial applications. In the NFT space, we are seeing this technology being applied to industries beyond just art. That's kind of like the first obvious one, is digital arts, but we're seeing the ticketing industry leverage this to combat things like ticket fraud and scalper bots. NFTs are also being used by some of the biggest commercial brands in the world to create new types of products and to drive brand loyalty and brand rewards. And we're also seeing this from a supply chain perspective. So we see a lot of important innovation that's happening, and our education campaign is to get ahead of regulatory conversations to make sure when it is time to discuss regulatory oversight for non-financial applications, we're doing so in an informed place. So we're happy to spearhead these efforts and to be proactive in terms of making sure policymakers are up to speed on new innovations that are coming to market, and moving beyond financial applications into non-financial applications is an important part of the conversation for blockchain technology, particularly as we're seeing the biggest regulatory overhauls for digital assets being developed right now in the U.S. Congress.
Perianne, thank you so much for joining the show this morning. That was the founder and CEO of the Chamber of Digital Commerce, Perianne Boring. That's it for First Mover. I'm Jen Sanasi. Thank you to my co-host, Lawrence Lewitton. We'll see you tomorrow.